Hello, everyone. This is Wall Street Weatherman, and you are awesome for being here. I appreciate you as always, and I hope you're enjoying these videos. I put a lot of time and thought into them, and I really want them to be useful. So this week, we're talking about gold and silver and the incredible runs that they've had this year so far. Gold is up 70%, silver is up more than twice that, and close to 150%. And I just want to talk a little bit about, the dynamics behind what's going on. So, excuse me, this year the US has been dropping interest rates, and there's the expectation going into next year that the same will happen. And with that in mind, when interest rates drop, the investments such as the U.S. Treasury notes and bonds, those yields will drop further, making them less attractive, drop as well, making them less attractive to investors. And we have a lot of foreign investors that invest historically in our treasuries, and so the yields come down. They're not as attractive to those investors, and then they look at what else they can do with their money. Quite often, they'll sell those bonds, they'll sell those treasuries and move them and then buy gold. They'll buy gold because the US market is unbelievable, fantastic, largest, most liquid market. And so instead of going to other countries, emerging markets, they will sell the treasuries and buy gold as a place to safely park that money in the meantime. It's a great strategy. And so again, as interest rates are dropping, the treasuries get sold off, gold gets bought. And also, as the treasuries drop, the US dollar will drop in value as well. It becomes less in demand, just like the treasuries. There's less demand for it, so the price of the dollar drops. And that means that relatively that those foreign currencies gain value. And so with that gain in value, that foreign currency can buy even more gold because again, that gold is priced in US dollars. So there you go. There's that part of it. Hope that makes sense. And then, there's also the emotion of it. There's a lot of worry out there. There's worry that if there's too much pressure to continue to lower interest rates in the US when it's not called for, that could lead to inflation. And those investors worry about that inflation because that does not bode well for overall US equities. And then there's the worry about geopolitics around the globe. I don't need to tell you anything more about that. There's a lot of concern about what's going on between countries. And also, there's the concern about the US debt. The debt of the United States, the US treasuries have always been AAA plus rated, the safest place where you could put your money. But that has changed over more specifically over the last couple of decades. We've had downgrades, and more recently now there's a lot of concern about the US debt and the price of that debt, the interest on that debt, the safety of investing in that debt, i.e. the treasuries. And so there's that as well. And one other thing that I want to mention, you may have heard about, is the debasement of the US dollar. And that is that the intention of the US government to debase the value of the currency. And the US government has been explicit about it. This administration wants a lower dollar because that will help our exports. That really spurs exports when your expensive dollar starts coming down to, more of a parity with the other currencies out there. That really then those foreign buyers can buy more US goods. It spurs US exports, but that is a concern as well for for treasuries and the move into gold, which is, a safety play. And interestingly enough, it's not the first time in history that currencies have been intentionally uh, devalued, or the attempts have been made, because it goes back to the Romans, it goes back to Henry VIII. Instead of printing their money in valuable metals such as gold, silver, they used cheaper metals. And so people really started to be concerned about, the government and the health of the government, which is fascinating to me. It goes back, many, many years. And so that's just an overview of what's going on with gold right now. And so silver, let's talk about silver. Silver has historically been a precious metal, along with gold. Not quite as much a store of value, but more one that's just precious and used for jewelry. But that whole story is changing with the more modern economy. We're finding more and more uses for silver. And so now almost 2/3 of the silver that is being bought and mined is, or should say mined and bought, is going into industry, is going into industrial uses. The top uses are the solar industry, also electronics like semiconductors and 5G networks, and EVs, electric vehicles. It's used. It's got great. It's got great. It's very conductive, and so it's really good at conducting electrons, and also thermal insulation for heat purposes as well. And so those three industries, solar and electronics and electric vehicles, are consuming more and more of that silver. So there's a much higher demand for it. But unlike gold, silver does not have a large supply out there. Gold has a much bigger supply, and it's mined much more as well. So when you have the demand for silver jump, and you've got such a sort of low reserve and low just general, extraction of the metal, it has an outsized effect. So partly why silver has lapped gold this year. Gold's been incredible, but silver has been unbelievable. So there's one other thing about that, and that is that more recently in November, the US government added silver to the critical minerals list. And there's been concern going back even further this year that there was going to be a tariff on silver by the US government. And so the silver that was in the United States, literally, instead of being bought or sold rather, was put into vaults, literally in New York, put in the ground in vaults. So there's a stocking up of silver on the worries about it being tariffed. And then also more recently, just last month in November, that it was added to that critical minerals list. So that's just the overview picture of silver. Supply and demand, like we talk about going back to economics classes, that you've got the supply and lower supply of silver, you've got the demand from everything that we've talked about. It can be the worry, it can be the opportunity cost of a foreign dollar. Rather than going into those US treasuries, there can be better places for it. But gold could be one of those, certainly this year with the way it's performed, but it can also be a nice layover for moving your money out and waiting for the next opportunity. And I want to end with a mea culpa. I want to end with, I always told you that I was going to tell you the good and the bad, and not that this is bad, but if I had one wish, now that it's the end of the year, it would be that I've been trading in the gold and silver for the last 2 years, and I wish that I had held on to both of those longer. I treated them as a trade, and I've been in and out and I've made money, and so I'm thankful for that. And as the saying goes on Wall Street, don't apologize, never apologize for taking a profit. But I just, it's been extraordinary. And I just, instead of trading them, if I had, put those and just bought and held as an investment, certainly I would have seen more appreciation. And so there you go. It was good versus better. And, but hey, it's just something that I wanted to share with you. So there you go, a little bit about gold and silver. And as always, uh, all content and views expressed are informational only and not advice to buy or sell any stock or equity. That said, I hope that it's now the end of the year. I hope that you all have a great happy holidays, Merry Christmas, everything. Um, and next year, I'm looking forward to bringing even more value and information to you. And I thank you for helping me get this channel started this year. And I'm stoked about next year and everything that it's going to bring. There are going to be surprises, there are going to be opportunities. We're going to go through it all together and have a great and safe holiday time right now. And I'll see you again, maybe, who knows, before the beginning of the new year. But if not, I'll see you next week. Cheers, guys.